Month of fall for the benchmark index as the Nifty 50, and so far in the month of Jan we are down around 2%, and today is the last day of the month. Now this will be the in the last 4 months we have declined around 10%, and this will be the biggest consecutive losses, month-wise losses for the Nifty 50 index in the last 23 years. Last we had seen this kind of a fall back in September 2001. In fact, if you look at since 1991, we have seen a decline of more than four or more months, nearly 5 times. And this could be the 6th such instance. Now in the past 5 instances, 5 times we have seen a decline to continue over the next couple of months as well. One time we have seen not much of a gain after 4 months of decline, and 2 times we have seen a strong bounce back from the Nifty 50 index post 4 months of decline over the next 2 to 3 months. However, 3 months of consecutive decline is something that we have seen quite often since 2001. To be precise, around 11 times we have seen 3 consecutive months of decline for the benchmark index. Now out of this 11 times, 3 times we have not seen much of a growth over the next couple of months or the next 3 months. As you can see here, in September 2011, over the next 2 months we just saw another decline of around 2% over the next 3 months we declined around 6%. So not much of a gain that we had seen, but nearly 8 times we have seen a strong bounce back coming in the benchmark index over the next 2 months and the next 3 months. For one of those example is here in September 2001, when we had declined nearly for 4 consecutive months. Over the next 2 months we saw a gain of nearly 17%, and over the next 3 months we saw a gain of nearly 16% coming in for the benchmark index. Now what are mainly the reasons behind this decline in the benchmark index? The first one and the biggest culprit here is the FIs. They have sold nearly 2.7 lakh crore rupees over the last 4 months, which is one of the biggest that we have seen. However, DIs have tried to hold on and contributed much to the benchmark by buying of around 2.74 lakh, but it's the FI selling which has led to this bigger fall. Apart from that is the second consecutive quarter of earnings decline that we have seen, that also led to analysts cutting their EPS estimates for the benchmark. And apart from that is the geopolitical concerns, lower capital expenditure, this being an election year, and delayed rate cut, which has also impacted the consumption in India, which also led to this downfall in the markets. One of the reasons was also the expensive valuation. However, after this fall, the valuations, at least for the benchmark index, look quite cheap compared to its 5-year average. As you can see here, the 12-month forward P for Nifty stands at around 18.7 times, while the 5-year average is close to 19.3 times. But when it comes to the broader indices, the valuation is still expensive compared to 5-year average. For Nifty mid cap, the 12-month forward P is around 30 times, while the 5-year average stands at around 26 times. While when it comes to the Nifty small cap index, the valuations, 12-month forward valuation is 21 times, while the 5-year average valuation stands at close to 18 times.
Well, thanks for that, Soumit. That was very insightful on how the markets have been in the month of January and what has the trend been like.